5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Shutdown, showdown. President Trump and Democratic leaders set to meet on a budget impasse a day before federal funding expires. Marching higher, a potential government shutdown pushes gold to a fresh record, oil dropping on supply concerns. And Israeli Prime Minister Benjamin Netanyahu and POTUS will meet at the White House as the U.S. pushes for a truce over Gaza. Let's have a look at how we're setting up for the first of the last 2 days in September, which has been a very positive month so far, particularly for the Nasdaq 100. We did indeed have a down day on Friday, but at the end of the session, we were only down 0.3% on the S&P 500, 0.5% on the Nasdaq 100. Nothing too dramatic. And today it looks like we are pointed to power higher across the indices. Let's have a look at yields. We are down a few basis points. Of course, a few concerns, maybe minor concerns this week, maybe a shutdown. There's also that jobs report that may or may not come out on Friday, depending on the former and what that jobs report might show. So you can see the 30-year yield down to 471, the 2-year yield 362, and the 10-year yield back down to 414. One other point to notice, Goldman Sachs today overweighting equities from neutral. We'll be digging into all of that with a Goldman Sachs guest this hour. But first, let's get to some individual movers and over to London. Valerie Teitel. Valerie.
Hey, let's start with some positivity on the tech trade. This time it's out in China. Alibaba seeing some upgrades from the street on Morgan Stanley and by Morningstar. Both are more positive about its cloud revenue to come. Morningstar calling the share undervalued, which is a very interesting comment given the shares of Alibaba have soared 49% in the month of August alone, really setting up for its best month since its listing back in 2019. Let's move over to the pharma space. Talk about GSK. There is a CEO change that they have announced. The current CEO will be stepping down after 9 years at the helm, effective January 1st. She will be replaced by the COO, and this comes amid growing concerns about the drug makers' pipeline, with these investors losing confidence in the current CEO's direction. Lastly, let's move over to the energy space. This is Occidental Petroleum. This was a report by the FT that they will be divesting their petrochemical business and what could be valued as a $10 billion company and the most expensive standalone petrochemical company in the space. Bonnie?
Valerie, thank you so much. Valerie Teitel there in London. And in just moments, Goldman Sachs' Simon Dangoor joining us on the rates markets. And later this hour, we'll speak to Cayla Seder of State Street as stocks climb towards their best since September of 2007. Goldman Sachs' Simon Dangoor then writing the following. The U.S. economy is bending, not breaking. Longer-dated yields are unlikely to come down as fast as shorter-dated bonds until we see a clearer path to fiscal consolidation, which could keep yield curves steep. Simon joins us now. He's head of fixed income macro strategies at Goldman Sachs. Simon, why the conviction that the U.S. economy is just bending and that we're not going to see a break anytime soon, be it in the labor market or in the inflation data?
Morning, Bonnie. Good to be on the show again, and thanks very much for having me. Look, I think when you look at the broad swathe of data in the US, the picture looks reasonably good. We just printed upgrades to Q2 GDP. Q3 GDP looks like it's going to be printing comfortably above 2%. And so the broad picture is starting to look somewhat disconnected from the weakness of the labor market. Now, it doesn't mean that the weakness in the labor market is not real. We continue to be in this low hire, low fire economy. There is building spare capacity, particularly amongst younger workers, and that's going to keep the Fed focused on buffering that and taking rates down over the course of the next couple of meetings. But it doesn't look to us like a typical setup where we would be going down that much worse path.
Now, how much are you considering the potential for a government shutdown this week in your outlook?
Well, I think it's hard to handicap the probabilities that we'll actually get a shutdown. I think the betting odds have it something like 70%, but these things have pivoted on a dime pretty quickly. I think for the market, the big question is, will we get the payrolls report on Friday, or will we be left hanging? When we look back over historical shutdowns, you tend not to see a very big, long-lasting impact of the shutdowns. And I think that's likely to be the case this time if we do indeed get a shutdown this week.
But as you could say, it could muddy the water in terms of the data and in terms of the labour market fragility at the very least. Now, your base case is for another 25 basis point cuts for the rest of this year and 2 more next year. What risks are there to that base case, Simon?
Well, I think this year, October seems something of a lock. The Fed's clearly in risk management mode. There's going to be some softness in the payrolls as we go through Q4 as some of the Doge-related cuts start to feed through the numbers. That should be a well-understood phenomenon by the market, but it'll certainly something which optically will sort of present a weaker labour market. With the Fed in risk management, it seems hard to believe that risk management is just the one cut in September, so October very likely. December, there's more to play for, but again, against that environment where the Fed is trying to buffer any of those worst scenarios in the labour market, if they were to show up, we think that that's likely. 2026 becomes a little bit of a tougher call. Our base case is for a couple of cuts in 2026. We'll have to see how the macroeconomy plays out then. Of course, we've also got the question of Fed transition. And if you look at how the curve is priced into 2026, perhaps you've got one cut priced associated with transition to a Fed leadership that wants to see things through a slightly more dovish lens than the Powell leadership. And that may be something which is sticky in the market for some periods to come.
Well, as you say, with inflation, in your words, behaved, holding duration in the 5-year sector is still attractive, and you do expect the curve to steepen even more, a little bit perhaps, and at least to stay steep. Until when, Simon? When does the environment change for the yield curve?
Well, I think that the US curve, as we just discussed, is reasonably fairly priced, but the portfolio value of bonds is still there. To reiterate that point about the Fed in risk management mode, the inflation picture that we're getting really allows them to take that position. And so I think if you do get worse outcomes on the economy, again, as we discussed, not our base case, then there is value for bonds in portfolios. I think when we think about the rates market globally, the real opportunities are very much outside of the US. There's scenarios where the ECB could be brought back to the cutting table in the beginning of 2026. The Bank of England's got a very interesting setup. And then, of course, you've got Japanese rates going the other way, and we think potentially going the other way quite a lot more than what's priced into the forwards at the moment.
How much does all of this depend on the dollar continuing to stay weak?
I think the dollar has moved into more of a stabilization range here. And I think our view on the dollar is somewhat balanced. On the one hand, you've got rates in the US coming lower. You've got this question of Fed's transition as well, as we discussed next year. That might weigh on the dollar. But on the other hand, one of the things that seems to be supporting the US economy against this backdrop of softer labor markets is what's happening with the broadening out of the AI trade and the demand to pursue ever more capex. That's an environment where the US looks to be a relative winner and will probably support capital flowing to the US and prevent the dollar going too weak. So broadly speaking, we're expecting something of a stable dollar environment as we go through the rest of this year.
Well, actually, now that you mentioned it, you're head of asset allocation research, Christian Muller-Glassman, and I mentioned it just a few moments ago, preferring equities over credit today, saying that spreads are extremely tight. So on the credit side of things, would you be offloading some credit?
So spreads are very tight, and I think it's right to be cautious about playing for any further tightening. And what's on offer in the credit markets really is a carry play. As a result, we like securitized credit. We like various expressions in the way that you can structure a portfolio in the corporate credit curve to try and highlight carry, to try and capture carry. But it's hard to play for further tightening from here. In terms of a widening, I think it depends whether we go down a worse macro scenario. Of course, rates can give you some buffer in that scenario, or we shift out of this very benign technical environment that we've been in, where supply in a net basis looking across public credit markets has been very tight and demand has been strong. We expect that that sort of healthy technical environment is going to persist for the rest of 2025. What plays out in 2026 will really depend whether we get a pulse of animal spirits that results in more aggressive leveraging up. Maybe we're starting to see in places the very beginning of that, but it's early days and the broad picture still remains healthy.
Simon, thank you so much. Always a pleasure to speak with you. That is Simon Dangoor there of Goldman Sachs. Now, as well, the top story is trending on the terminal this morning. China has asked the US to change its language describing its stance on Taiwan. According to sources, China has asked the Trump administration to officially declare that it, quote, opposes Taiwan's independence. The wording is stronger than the Biden administration's statement that the US, quote, does not support Taiwan seeking independence. New York City Mayor Eric Adams has withdrawn from his re-election bid amid faltering poll numbers and a struggle to raise and access money. Adams's decision to withdraw may be too late to alter the outcome of the New York City mayoral race in November. Multiple polls show Assemblyman Zoran Mamdani is likely to win. Lufthansa is planning to cut 4,000 administrative jobs by 2030 as the carrier seeks to improve profitability. The job reductions will occur through digitalization, automation and process consolidation, with the majority of the reductions in Germany. Coming up, shutdown looms. Top congressional leaders set to convene at the White House with President Trump. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Over in Washington, President Trump set to meet with congressional leaders, including Senators Chuck Schumer and John Thune, also Congressman Jeffries, at the White House today, to see if the Democrats and Republicans can hash out a short-term spending bill and avoid a government shutdown, with federal funding due to expire tomorrow. Bloomberg's Kasia Klimashinska joins us now from Washington. Kasia, what do we know about what both sides want after the weekend?
We know for sure that the deadline is fast approaching. Government funding is expiring on Tuesday at midnight. So on Wednesday, we could see some federal activities closing down unless there is an agreement reached. So on the table, there is a bill that was passed by the Republicans-controlled House. That bill would fund the government the way it is being funded now for another 6 weeks. And Democrats say it's a non-starter. They want the government to take up healthcare subsidies and make sure that those healthcare subsidies are extended so that people don't see basically higher bills for their healthcare insurance later in the year. Republicans need Democratic votes in the Senate. They need at least 7 of those votes. So that's why there's a meeting today at the White House at 3 p.m. President Trump will meet with congressional leaders from both sides, and we'll see whether they make any progress.
Yeah, the clock literally ticking. Now, also today, Trump is set to meet his Israeli counterpart, Benjamin Netanyahu. What are we expecting to come from that meeting?
That's the main event of the day, really. The two meet at 11 a.m., they talk, they will have lunch, and then there will be a press conference around 1 p.m. here in Washington. This is the 4th time that Benjamin Netanyahu is coming to the White House since President Trump returned to office. And on the table, there is a deal, a proposal that President Trump also reportedly presented last week to some leaders in the region. That proposal would have Hamas return the hostages and Israel gradually also taking their military forces back, and so that would lead to the end of the war in Gaza. But we will see what the two decide on today. Neither Israel nor Hamas have commented on this proposal, and Israel has said that they have to wait and see what's decided today at the White House.
You know, Kasia, Defense Secretary Pete Hegseth is convening a meeting with top military officers tomorrow. What do we know?
Really not much. It's a surprising meeting. The Secretary of the Defense, Pete Hegseth, didn't give any details. President Trump commented on this yesterday a little bit in a phone interview to NBC. He said that it will be a good meeting tomorrow here near Washington. Top generals, top military officials will come down, and President Trump will stop by and visit as well. We don't know whether it will be a big speech, big message, or something may perhaps behind closed doors. We do know that it is causing some headaches here in Washington. Of course, it's it's an interesting situation from the point of view of security and also having all those important people in this one place at the same time.
Yeah, absolutely. Kasia, thank you so much. That is Bloomberg's Kasia Klimashinska in Washington, D.C. Just to get you set up for your trading day, futures look to be pointing higher to the tune of 0.5% for the S&P. It's the same across all major indices today after a down day on Friday and really a few down days last week. Didn't really do much for the month, though. We still have the Nasdaq 100 up very close to 5% on the month, and there's still 2 trading sessions left. Bloomberg US dollar index down about 0.25%. We're seeing a little bit of strength for sterling today at 134.41. Also the euro trading at 117.25. It's stronger to the tune of 0.2%. The yen as well stronger, above 148.50 today. Now, Commodities-wise, we're seeing weakness in the oil market. It looks like OPEC Plus is going to bring back more production in November, so we're seeing oil down about 1% or so. Coming up, UK Chancellor Rachel Reeves seeks to persuade the Labour Party that fiscal rigour wins votes. We're live at the Labour Party conference in Liverpool next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the Washington Post, at least 4 people were killed and several others injured at a Michigan church on Sunday. A gunman rammed a truck into the building packed with worshippers, opened fire and deliberately set the church ablaze. The suspect was killed after officers engaged in gunfire with him in the church car park. Next on the Financial Times, the Securities and Exchange Commission says the market should decide how often companies report their earnings. In an FT op-ed, Chairman Paul Atkins said, quote, "It is time for the SEC to remove its thumb from the scales and allow the market to dictate the optimal reporting frequency." And in the Economic Times, Jaguar Land Rover's owner Tata Motors is seeking around $2.7 billion in emergency funding from global banks. The carmaker is trying to ease strain on its suppliers after it had to halt production due to a cyber attack. And in the UK, the Labour Party's annual conference is underway in Liverpool. Chancellor of the Exchequer Rachel Reeves faces the challenge of convincing her colleagues that her economic programme can undermine the populist right without actually risking her reputation for fiscal prudence. Reeves spoke with Bloomberg's Lizzie Burden. Have a listen.
Those fiscal rules that we set out in the election to pay for day-to-day spending through tax receipts, to get debt down as a share of GDP, to get the deficit down this year, those commitments stand. And I'm also determined to bring down inflation further because I recognise that inflation at 3.8% is still too high. So that is a global challenge as well, but we get that down.
Those commitments stand. You say the manifesto stands. In the manifesto you said will not increase national insurance, the basic higher or additional rates of income tax or VAT. Yes or no, does that still hold?
Yes, it does, and we also made that commitment around corporation tax as well, and those commitments stand. And they stand for a reason, because working people paid a heavy price in the last Parliament. It was the worst Parliament on record for living standards. It's still the biggest challenge for working people, so those commitments stand. But what I want your viewers to know, that my commitments to economic stability, to fiscal responsibility and to those fiscal rules, they absolutely stand, because they are the bedrock of stability, and only with stability can we grow the economy.
So we need to know where you're going to find the money from. The French are in a similar fiscal bind. They're seemingly on the brink of a wealth tax. Is it time for a mansion tax here in the UK?
I would like to differentiate ourselves from what's happening in other countries around the world.
Wheels are higher here.
Yes, but they have struggled to get a budget through. And we successfully got the budget through last year and the spending review. And many people said that wouldn't be possible because we have to make difficult decisions. But I'm up for difficult decisions when they are in the national interest, and I will continue to take them. We already tax wealth in Britain with capital gains tax, with inheritance tax. The budget last year, as you know, we got rid of the non-domicile status in the tax system. We put VAT on the school fees. We increased taxes on private jets. We already have taxes on wealthy people in Britain. I don't think we need a standalone wealth tax. And in fact, countries that do have that don't have those other taxes. So I'm not even sure it would work.
Bloomberg UK correspondent Lizzie Burden joins us now from the conference in Liverpool. So what concrete proposals is the Chancellor going to tell the party faithful?
Well, we'll have to wait to hear at 12 p.m. London time, Vonnie, because this is when her speech is coming. And you heard her there saying that she's committed to her fiscal rules, but she's also committed to the manifesto pledge not to raise income tax, national insurance or VAT. So it's going to be very, very difficult for any other tax lever to find the money that she needs to find. Our economists estimate that that's £35 billion. And we know that the left wing of her party isn't very keen on spending cuts. So she's really caught between the bond vigilantes and that left wing. It's a very difficult task ahead. But I have to say, Vonnie, this conference crucial for Prime Minister Keir Starmer. It really is make or break. The polls show that if there were an election now, he would lose to Nigel Farage's Reform UK party. And this conference hall, the corridors of it, are full of chatter about who could be the next potential Labour leader because his MPs are so worried about those polls. So real pressure on Rachel Reeves later today.
Yeah, and Rachel Reeves' own personal popularity ratings have cratered, Lizzie. Is there anything she can do to win back the support of the party faithful?
Well, what she shouldn't be doing is cutting spending, it would seem. There are many other taxes, but look, I ran it past her. Should they be doing a wealth tax like France? I asked her, should she be doing a mansion tax? And she specifically said she's not sure that it would work to have a wealth tax like France is having anyway. So again, the question is, what other means of raising revenue are left for her?
Yes.
I'm not sure she'll be setting out the budget in this speech today. It's at the end of November. We'll have to wait.
Lizzie will be watching all of it for us. That is Lizzie Burden there in Liverpool. Coming up, can stocks continue to blow past all-time highs? Cayla Seder of State Street joins next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Shutdown, showdown. President Trump and Democratic leaders are set to meet on a budget impasse a day before federal funding expires. Marching higher. A potential government shutdown pushing gold to a fresh record. Oil, though, dropping on supply concerns. And Israeli Prime Minister Benjamin Netanyahu and President Trump will meet at the White House as the U.S. pushes for a truce over Gaza. Let's take a look at these markets because they're certainly brushing off this week's concerns. Top of mind would be a potential shutdown. The non-farm payrolls report not even getting released in that scenario, but a non-farm payrolls report getting released is also a concern for this market this week. And of course, the sell-off last week, of course, that's what might be bringing in potential dip buyers, with futures firmly pointed higher. Just 2 trading sessions left in September, which has been a not too shabby month so far. The Nasdaq 100 up 4.7% month to date, even with last week's down days. Now, Goldman upgrading equities this morning to overweight as well from neutral, citing limited correction risks in the near term, and also downgrading credit to underweight. So let's take a look at those yields because we are seeing those yields down just a few basis points. Perhaps this is where we're seeing the concern expressed. 362.25 on the 2-year, 471.44 on the long end. Let's get to some individual stocks to watch now. Here's Valerie Titel in London. Valerie.
Good morning, Ivani. Let's start with a check on Alibaba. There seems to still be a lot of great sentiment out there for this AI trade, especially the China AI trade, upgraded by both Morgan Stanley and Morningstar. So those ADRs are trading higher by 3.5% in pre-market trade. Interesting to see that Morningstar said that their shares are undervalued, which is a big statement given that their Chinese listed or their Hong Kong listed shares have rallied 49% month to date. Let's move over to a bit of a CEO change for GSK in the pharma industry. Their CEO will be stepping down at January 1st, will be replaced with their COO, and this comes amid some worries about their pipeline for their new drugs. It'll also be interesting to see how they can turn around this pipeline under a new leadership. Lastly, let's have a check on the energy space. We had Occidental Petroleum a report in the FT that they will be divesting one of their petrochemical businesses, their main petrochemical business. So we're seeing shares of Occidental Petroleum up 1.25% on the back of this. They will be using that debt raised from the divestiture to pay down some near-term debt. Funny?
Valerie, thank you so much. Valerie Titel there in London. Now, Cayla Seder of State Street says this isn't an economy in need of saving and a deluge of cuts isn't necessary. Even so, she sees upside to this market, writing, quote, "We expect stocks to keep making new highs as earnings growth remains robust and multiples are supported by easing monetary policy." Cayla Seder, macro multi-asset strategist at State Street, joins us now. Cayla, I have to ask, if this, in your view, is a very healthy economy and what you say is a deluge of cuts that are coming aren't necessary, what's to say that those cuts don't actually do some damage to this economy?
Yeah, hi, Bonnie. Thank you so much for having me. I think what's important here is, we say that the economy isn't in need of saving when we look at aggregate level data. Simultaneously, we still see monetary policy generally supportive of the stock market. And so, really, what we're getting at there is, and I think the question is, what is going to lead the stock market higher? And what we see now is that, yes, the Fed had their first cut of 2025, but we still see relatively strong economic data. And so what that means for equities is that for equities to move higher, we still expect recent trends to continue. So still expect the AI trade, tech, those parts of the equity market to move higher, because those are the parts of the equity market that are able to outperform during a period where we're not seeing tons of monetary policy easing in large magnitudes very quickly.
If that's the case, I'm just curious as to whether comes a point at which, everything just falls apart. I mean, at the moment, it seems like when we have a few down days, dip buyers come in. And once again, this week looks to be proving that fact. Is that ever going to end?
That's a great question. I think there's a couple ways to look at this. One thing that we can do is we can look at institutional investor behavior in our data at State Street. And what we see is across multiple asset classes, we see solid signs of risk seeking. And then within the equity space, what we're seeing right now is we're starting to see investors get a little bit more comfortable adding exposure to underweight parts of the market and starting to add a little bit more cyclical exposure. With that said, they're not selling out of tech or parts of the market that have really led rallies year to date. And so, I think the breadth of what we see really speaks to the strength of the underlying market here.
So the market might be strong, Cayla, but is it a market looking past any shutdown risk and also any geopolitical risk? And is that wise?
Yeah, for sure. I mean, that's certainly something that we're keeping an eye on, especially this week. And, geopolitical risk has certainly been a factor, especially this year. But what we've seen year to date and what we've seen in the past is these events are usually buy the dip opportunities. And especially this year, this has really proven to be a buy the dip opportunity. And so we would expect that to continue for now.
Why then is gold at a record if the outlook is so rosy?
I think it's hard to find what that safe haven asset is right now. And gold is one place that has stood out to be this sort of safe haven. And so I think when you're looking to diversify, gold has really stood out this year. And so that has kind of acted as this counterbalance to some of that risk. So I would say, that's more of a diversification opportunity.
Matt Hornback at Morgan Stanley, talked about the third estimate of the GDP data that we got last week. And he said that it revealed a non-financial corporate sector that offset tariff costs through lower unit labour costs and lower profit per unit. Now, that's great for one quarter, but that's not something that can continue for several quarters. Do you have any concerns about earnings season and what it might tell us next time round?
When we look at expectations for earnings season, which we're right around that corner of earnings season, what we see is that a lot of the trends a lot of the expectations support trends, supporting places like tech, supporting places like communications, parts of consumer discretionary. And these align really well with our holdings data, where we see investors continue to allocate towards higher profitability, higher quality parts of the market. And that's where their positions align, and that's their overweights. And so because expectations align with those positions, that's why we're expecting these part of these trends to continue.
Yeah. Cayla, the SEC chair, Paul Atkins, writing in the FT today that it should be up to companies, the cadence that they report on. I'm curious if you imagine some companies will stop reporting quarterly.
Yeah, I think that's a company by company decision. I would say when we look at Trump's original or first administration, this is something that had been discussed as well and ultimately didn't end up panning out. But I think ultimately, like from the news we've seen so far, that would be kind of a company basis. But so far, we haven't seen much of that gaining traction, and we didn't see that gain traction in the first administration.
All right, Cayla, thank you so much for joining us this morning. That is Cayla Seder of State Street. Now to other top stories trending on the terminal this morning. China has asked the US to change its language describing its stance on Taiwan. According to sources, China has asked the Trump administration to officially declare that it, quote, opposes Taiwan's independence. The wording is stronger than the Biden administration's statement that US officials, quote, do not support Taiwan seeking independence. New York City Mayor Eric Adams has withdrawn from his re-election bid amid faltering poll numbers and a struggle to raise and access money. Adams' decision to withdraw may be too late to alter the outcome of the New York City mayoral race in November. Multiple polls show Assemblyman Zoran Mandani is likely to win. Auto parts supplier First Brands has filed for Chapter 11 bankruptcy. The bankruptcy follows scrutiny of its reliance on borrowing against future cash flows, drawing short sellers that included Apollo Global and Diameter Capital Partners. First Brands makes wipers and car filters sold at retailers such as Walmart. Coming up, countdown to a shutdown. We'll look at the prospects for getting a congressional deal to keep the government funded. That's next. This is Bloomberg. The U.S. government is set to run out of money at midnight on Tuesday unless Democrats and Republicans can agree on a short-term spending bill. President Trump is set to meet with congressional leaders today to discuss proposals. For more, I'm joined by Bloomberg's Kasia Kimashinska, who leads our breaking news coverage out of Washington, D.C. Kasia, what do we know about what both sides want now after the weekend?
So lawmakers have to pass something. They have to pass a bill by the end of the day tomorrow, or otherwise, as you mentioned, the government will shut down at least partially. Obviously, some essential operations would continue. So the Trump administration has already said that it would, for example, continue to charge tariffs. But other government agencies might reduce their operations. So President Trump is hosting congressional leaders from both parties today at 3 p.m. at the White House. On the table is the bill that the House, controlled by Republicans, has passed. That bill would continue to fund the government the way it has been funded so far this year. And that's really a non-starter for Democrats. Democrats want to take action on healthcare costs. They are concerned that if nothing is done, then the medical costs will go up for some Americans later this year. And so today, for the first time, really, the two parties and President Trump will meet at the White House. But President Trump hasn't really offered any plan. What he did, he was issue a threat. He said that if there is a shutdown, then he will ask agencies to not only furlough some of the employees, which would mean they wouldn't do any work, they would not receive pay, but once a funding bill is passed, they will be called back. But President Trump might instead ask agencies to let some of those employees go, so basically fire them.
Oh, wow. Well, President Trump also set to meet his Israeli counterpart, Benjamin Netanyahu, today. What are we expecting to come from that meeting?
This meeting will happen earlier in the day. The two leaders are meeting at 11. They will talk, they will have lunch, and then there will be a press conference. And this is the fourth time that Benjamin Netanyahu is coming to the White House since President Trump returned to power. The two will discuss a 21-point plan that President Trump has. He has presented that plan to some leaders in the region earlier last week during the UN in New York. And today he will discuss it with Benjamin Netanyahu. We know that the markets are optimistic with shekel strengthening, for example, so there is some hope for a ceasefire, and President Trump himself has said several times that he wants the war in Gaza to end, that he wants the return of hostages. So I guess we'll hear from both men a little bit later today here in Washington.
A bit of an update. Now, President Trump is set to join Secretary Pete Hegseth's meeting with military top leaders. What do we know about that meeting?
Very little. Really an interesting, surprising meeting. Everything is surprising about it, including its timing. So it will happen on the last day that the government is still funded. And President Trump said yesterday that he will attend. He gave a short phone interview to NBC in which he said he will join the meeting. It will be a good meeting with a good message, talking about how well the U.S. is doing, how strong the American military is. We don't know if it will be open or closed press. What we know is that the top military officials from around the world will travel here to Washington, near Washington in Virginia, to meet with the Secretary of Defense, Pete Hegseth, and also President Trump.
All right, Kasia, thank you so much. That is Bloomberg's Kasia Klimaszinska in Washington. Let's turn to commodities. We're seeing gold marching higher again as that potential government shutdown and also the weaker US dollar pushes the metal to a fresh record. Joining us now is Bloomberg Metals and Mining reporter Jack Ryan. So we're firmly above 3,800 now, Jack. Why? Is it just purely the government shutdown and the weaker dollar? Are there other factors pushing this metal higher?
Well, really, over the last few weeks, it's been exchange-traded funds. So basically a big pile of gold and you own a share of it. That's really what's been driving the gains. They've had, I think, the highest gains in about 3 years this month so far. We'll see how the rest of the month plays out. And that really shows you that it's Western investors in particular, as of late, who have been buying into gold. And that has been driving it higher. And around that, you have the Fed has resumed rate cuts. We know that's good for gold because gold doesn't pay you an interest rate. And then also, I think the firing of, or the attempt on the firing of Lisa Cook was a key moment because it really highlighted this Goldilocks scenario for gold, which could be high inflation and low rates. So you get gold to hedge your inflation and you don't have high rates, making cash more appealing. And so that, I think, is what's happened over the last couple of weeks.
Now
it's driven it much higher.
Have been talking about gold really all year. Even though it's gone up sort of at a measured pace, it's still gone up quite substantially. I mean, we're coming up on 45, 50% here. Does the market think this rally has gone too far and maybe even too fast?
Absolutely. I mean, you can broaden it out. You can look back to late 2022. It's more than doubled since then. Obviously, at this point, then you would have to start asking questions. Is it overbought? I think when you look at some of the data, for example, exchange-traded funds holdings, they've been increasing very fast, but they're not at their high point. Central bank buying has been elevated for a while, but it has remained quite consistent. If you look at the positioning data from hedge funds on the futures market, they're not overextended. And so you have, for example, Goldman Sachs, they predict 4,000 by the middle of next year. And they're pointing to this really key trend, which has actually really driven the broader rally, which has been central banks buying.
Yes.
And they say they can see that continuing for another 3 years. So, yeah, we're still uncertain, but a lot of banks say it still has room to run.
The factors are still there. Jack, thank you so much. That is Bloomberg's Jack Ryan. And just on commodities, I want to point out that Brent crude and WTI both down about 1.5% on supply concerns. Signals from OPEC Plus that they will bring back some more production at the meeting that's on next weekend, that production will come back online in November. So oversupply concerns are hitting this market once again, sort of offsetting any geopolitical concerns. WTI trading down 93 cents at 64.79 a barrel. Turning to pharma now, shares of GSK getting a boost on some C-suite shake-up news. CEO Emma Walmsley is stepping down after almost 9 years at the helm. She'll be succeeded by the current Chief Commercial Officer, Luke Mills. Joining us for more now is Bloomberg Health reporter Ashley Furlong. Ashley, shares in GSK have declined under Walmsley, but, you see that. I mean, that's not necessarily, a sort of a report card maybe on her reputation throughout her tenure. But how will her tenure be seen? What challenges face her successor?
She's had a lot of wins, as well as some challenges, as many pharma CEOs have over the past couple of years. I think core among what Emma has tried to do is really to invest in the pipeline. She's really put a lot of money into the pipeline of drugs that are coming to market. She also fended off an activist investor, Elliott. She resolved litigation in the US around Zantac. But still, investors are questioning whether the pipeline is sufficient, whether the pipeline can actually meet her ambition to get to 40 billion in sales by 2031. So that's really going to be what Luke Miles really needs to do, is to get to that goal. And that's going to be about the pipeline and about delivering the current drugs that are on the market and actually selling them to more people.
Yeah, certainly the market will give him some time. We'll see how long it does give him. Elsewhere in the UK and again in pharma, AstraZeneca planning to tweak its US shares listing. It's been trying to list in the US for some time now. What are the changes that it's trying to make?
So this is very much about completely a dual listing. So it'll both be in the UK and in the US. It already had ADR shares listed in the US, but this is now a sort of a full listing there. And AstraZeneca is saying it will help it to attract more global investors. And there's a lot of focus for AstraZeneca on the US. It's really its core market. So we are sort of very closely watching and looking to see about, potential more M&A there. And I know that AstraZeneca is obviously very keen to expand their investment base in the US.
Now, how does a US listing help Astra in terms of, anything regulatory, particularly when it comes to this breast cancer drug that it has in its pipeline?
So, for example, with Enhertu, which we saw positive results with today, that's the breast cancer drug. The changing the listing shouldn't actually impact that at all. AstraZeneca obviously has lots of drugs for sale on the US market. This is very much about just increasing the investor base and making it easier to invest in the company in the US. As I think there's already been quite a lot of trading in shares there, and AstraZeneca is just really keen to ensure that it has both those listings. There was speculation about whether it might delist in London earlier this year, but that is not being the case, at least for now.
Well, certainly ADR is pointed higher in the pre-market, up 1% there. Bloomberg Health reporter Ashley Furlong, thank you. Coming up, a slew of jobs data and a possible government shutdown. We'll get you set up for your week ahead next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now, a look at what's ahead today. Fed speak coming from Waller, Hammock, Musallam and Bostic all throughout the day. A lot to parse. Then a host of jobs data on deck this week, or at least we hope. It starts with jolts on Tuesday. Also, though, on Tuesday at midnight is the deadline for the US government to agree on a new budget, or else we're in a shutdown. And in the case of a shutdown, of course, Friday's non-farm payrolls report may be delayed. Let's take a look at some individual stocks on the move in the pre-market. Keep an eye on chip makers today. Huawei plans to double its high-end AI chip output next year. Not so far having an impact on Nvidia, up about 0.7% of the pre-market. Occidental Petroleum up more than 1%. It's in talks to sell its OxyChem unit in a $10 billion deal, according to the Financial Times. And then Moonlake, a biopharma company, down 85% of the pre-market. Weak drug data spurring downgrades across Wall Street for that company. Let's take a look at the macro picture, because once again we're seeing dip buyers potentially emerge, with S&P futures and all of the indices futures pointing to higher opens, much higher opens, in a week where we have a lot of concerning items on the agenda. The Bloomberg Dollar Index down 0.2%. That's helping gold to a record above $3,800 today, and the 10-year yield at 4.1426, down 3 basis points. Well, that is it for Monday's Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.